The Salt Lake City, Utah real estate market has been wild, to say the very least. It's gone up, it's gone down, it's acted a lot more like the stock market in the last year than it usually does. Generally, real estate is very slow to move. It doesn't jump up and fall down really quickly. It takes a year or two to see certain policy changes make a difference in the market. But this year's been a little bit different, so it's really important that we're keeping track of the numbers. Let's take a look at them. So here we are, market statistics summary for Salt Lake City for single family homes. I'm not going to put any price in, even though I really do think, as I've said in previous videos, I feel like there are 2 or 3 bands in the market. Like I've said in the past, I really feel like everything up to about $500,000 lives in its own category. Everything between $500 to $750, maybe $800 or $850 sometimes, lives in its own category. And then everything above that lives in its own category. And, you know, I've noticed looking at some of the numbers lately that there's even a difference between a home at $1.5 million all the way up to about $2.5 million. Above $2.5 million, it's definitely in a world of its own, which is to say that usually those homes sit on the market a lot longer because there are just a lot fewer people who can afford those homes. So looking at the entire market for Salt Lake City without accounting for those bands, maybe we'll see some information that sort of confirms that. But what we see here is we had our active listings for November of 2023 were 1,453 active listings. That's down about 10% for the month, but up 29% considering the 6th month passed. Under contract, 620. That's down about 8% for the last month. Sold listings, 549, down 15.8% for the last month. So as you can see, the market slowed down quite a bit. And I'm sure you've all heard this in the news, that sort of thing, but here are the numbers confirming it. New listings down almost 30% to 593 homes, which is to say that there is a serious shortage of homes on the market right now. Average days on market has jumped up to 45 days on market, which is up about 2.2% from the last month. And so that's telling us that there's less inventory, but maybe also slightly less demand too, if days on market are going up. So here we are with our sales price by range, kind of like I was saying earlier, $300,000 to $500,000. That makes up 33% of the market right now, which does not surprise me at all. Those are the homes that most people can afford to get into, if they can afford to get into a home at all. And so it doesn't surprise me, but that is a giant section of the market. The next section that they have categorized out is $500,000 to $700,000, and that's about 35% of the, 36% of the market. So a little bit more even than those entry homes. People are moving up into their next home. That tells you that a lot of the people buying a home are moving up. It's their second home. And then $700,000 to $1 million. Wow, this is almost exactly like I just said. $700,000 to $1 million is 19% of the market. 11% of the market is $1 million to $3 million. And then there are those 2%, 2%ers, right? Those people that are buying homes that are more than $3 million. Presumably, that's presumably what that is mostly. Might be a couple other things like manufactured homes that are closer to $125,000, like that kind of thing. But looking at our month supply to sold to list price range, you can see that for November of 2023, between $200,000 and $300,000, we have a 0.71 month supply of homes, which is to say that it is very much a seller's market in that range. Obviously, those are the most affordable homes. Anything from 1 to 3 months supply of homes is a seller's market. 4 to 6 months is a balanced market, and anything 6 and above is going to be a buyer's market. So In our $300,000 to $500,000 range, we have 1.42 month supply of market. And then sold to list price, as you can see, it's jumping up a little bit, 90 to 99. And you can see that this has actually gone down a little bit from October. And so, like I said, less inventory, slightly less demand, $500,000 to $700,000 month supply, 2.55. Still definitely a seller's market, still a very healthy price received on every listing out there. $700,000 to $1 million is 3.34. It's a little bit more of a balanced market, just barely almost a seller's market. And then they're still getting very, very healthy prices for those listings. And then month supply for 1 to 3 million is 5.22, definitely very much into the balanced market range, which does not mean that those homes don't sell. They definitely sell. It just means that those sellers have to do some things to get buyers. They have to make sure that the home is well kept, well staged, the photos look good. They might even have to give a few concessions to get a buyer in the door. So anything above $3 million is 14.33 months supply on the market, which is an extreme buyer's market. If you are a buyer in that range, you can be very, very picky with whatever's on the market. So, and that's shows in the sold to list price coming in at just under 92%, whereas some of these other ranges are closer to 99 and 98%. Here we have a bit of a graph of the median price versus the square foot versus sales volume. Okay, so what that's saying is that we have our graph that's going all the way back to November of 2021, and it's showing how much volume there was, how many homes were sold in that time. And as you can see, it's gone down basically. November of 2023, we're close to just under 600, whereas in terms of volume, whereas in November of 2021, it was closer to, I'd say 1,100, maybe just under 1,100, something like that in terms of volume. For the price, however, we're looking at 250 has stayed fairly even. I mean, give or take a couple tens of dollars there. The price per square foot has stayed about $250 throughout all of that time.
If you've been wondering what the very best information is to know if you want to buy a home, maybe the thing that you want to know is how many homes are on the market right now, how many have gone under contract, is the market moving towards buyers or is it moving towards sellers?
So here we have our active listings. It's at about 8,780 homes, which is definitely less than where we want it to be. Before the pandemic, we were looking at about 10,000 homes on the market, and even that was quite a shortage. That was about a 6-week supply, where 6 months is kind of an average there. That's sort of a balanced market, I guess is what I'm trying to say. 4 to 6 month supply is balanced, and a 6-week supply is 10,000. So we're looking at about a month supply of homes. The number of homes sold has come down 22.28% over the last 30 days. We have 3,861 homes under contract, which is not bad. So about half of the homes hitting the market are going under contract. You can see that the sold to list price ratio over the last 24 months has come down. It was pretty high for a minute there, 102%. I don't care for average, let's just do median. About 102% right there. Came all the way down in 2022, those winter months, to 98%. We're pretty close to 100% now. It's come down again a little bit towards 99%. I would say these are seasonal fluctuations. This is just what you kind of see happening as we head into the winter months. Price per square foot, let's get that average out of there. So the median price per square foot, like we just talked about, has stayed pretty even at about $250 a square foot. We have low inventory, but even less absorption rate than we normally would at this point. I think generally speaking, interest rates were
topping 8% in November, which is the highest they've been since interest rates started going up after the pandemic, which really helps explain why demand is way down. For every 1% the interest rate goes up, we lose the bottom 18% of that buyer pool at that current moment. So if you think about who fell out of the buyer pool since interest rates started going from 3% all the way to 8%, that's most of the people in that buyer's pool came out. So with interest rates coming down near 7% in recent days, the last 5 weeks actually, interest rates have been coming down, which is not reflected in this graph because this is November and we're in the middle of December right now. With interest rates coming down about 7%, I would expect that this absorption rate will jump up quite a bit in December and January. A lot of people wait to list their home in January. They feel like it's just a new start. They've got holidays. There's all sorts of other stuff going on. They just don't want to deal with the headache of getting listed before then.
So I fully expect to see quite a few new listings hitting the market January 2nd, somewhere around there. And we'll have quite a bit more demand for those homes as interest rates come down. The thing that we will be looking to see is the interest rates come down much more than 7% over the next year or so. A lot really depends on what happens with inflation. If the Fed feels that they have tamed inflation enough, they will start dropping their interest rate and the market will respond accordingly. That's going to have a huge impact on the bond market, and we'll see according changes to mortgage interest rates too. If you've been thinking about selling a home, I would love to answer your questions. Right now is a great time to list your home, even though it is a little bit slower. The people who are buying a home are very, very serious. If you list well at a really good price and you've maintained your home and we get it staged and looking really nice, there's just no reason we wouldn't be able to get it under contract in a really, really short amount of time and get you exactly where you need to go. There's no reason that we have to get out of the house before you're ready either. If you want to get it under contract before the holidays and stay in the house well after the holidays, that's something that can be negotiated too. Reach out to me. I love hearing from you. It's been so much fun to hear from all of you. Thank you so much.